Jeff Gibby here over at MetaStock. How's everybody doing today? Hope you're well. Thanks for coming again. Let me know you can hear me by just typing it in the chat window, and we're about to get underway. So welcome. Thanks for coming. And Philip says he can hear me. Don says he can hear me okay. Good. All right, let's go ahead and get underway. Today is going. Thanks, Sergi. Sergi can hear me too. So at least 3 people can hear me. That's a good start. Let's go ahead and get to the legal disclaimer. Kind of ending a series of training events here, and I wanted to save my last or one of my favorite classes for last. So just a couple questions. I know I've done it seems like a ton of webinars the last several weeks. How many of you guys been to? If you'll just let me know in the chat. And I'm going to go ahead and read this legal disclaimer. I think I've done like 6 over the last 3 weeks, just kind of geared towards the Trader Summit. I'm wondering how many on average people. Sergi has been to 5. Well, welcome back. Okay. Don went to the summit. Cool. Awesome. Okay. So, Sergi, you probably have this as memorized as I do by now. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software or any information provided in connection with the company. All right, and then, as I always say, partially just to cover what I'm saying, we're going to look at stocks that you're interested in today. I'm going to teach you kind of this method on your stocks, but let's not take that as a recommendation for me to buy or sell. I'm not licensed to handle out investment advice, so even if I say buy Apple tomorrow or something, then don't listen to it, okay? All right, cool enough. Really, my main goal with this class is to kind of give you just another system. This is one of my favorite systems in MetaStock, what we're talking about today. Before we get underway, I just want to talk a little bit about kind of the bonus offers. If you haven't signed up for your trial yet, or I should say your Summit Action Package yet, Friday is the deadline. If you do it after Friday, you'll still be able to kind of get everything, but you won't be able to get 2 years of Stocks and Commodities magazine. The bottom line is I have to get the list put together. So, and it's a great package. 3 months of MetaStock data, 3 months of MetaStock, candle profit systems at a huge discount, his bonus pre-filter scans, and then 2 years of Stocks and Commodities, $358 if you do the DC version of MetaStock. And you do need to call in. It's not a web available special, but our sales guys are very, very friendly. 800-882-3040. The real-time package is the same, $549. You save $600 with that package, and you can call in to our sales guys, 800-882-3040. Dennis asked a good question. I signed up and bought CPS. How do you use the pre-filter scans? Well, I will cover that for you. In case you're wondering how you get the pre-filter scans, I'm going to be sending an email out with the pre-filter lists. And then once we're kind of done today, I'll show you real quick. The pre-filter scans are pretty easy to use. They're really looking up to kind of go through a major list of, let's say, stocks, and then identify which ones have a certain amount of volume and are, according to Steve, the best way. But I will cover that. That's going to take us way off the path, and I promise to answer questions today. So if you haven't gotten the pre-filter scans and you signed up for the bonuses, I'll be emailing those to you in a download package that you can install. And I'll be doing that on Monday. And if you want it before then, just drop me a message. I'll send it to you before then. So in terms of getting them. Okay? Let's go ahead and talk of today. We're not really going to be overviewing MetaStock. I think I've extensively covered MetaStock over the last, I don't know, 6 training sessions that we've done. I really want to focus in on RMO and how it works, and it is one of my favorite systems in MetaStock. It's definitely one I've used the most, definitely one I've taught about. I think there's probably about 300 YouTubes up there with me talking about RMO and how good it is, and how much I like it. So it's a great system. In case you're not familiar with RMO, RMO stands for Rahul Mohindar Oscillator. And Rahul is a friend of mine. He's also a great technician in India. He does a lot of training of people in India on how to trade. He also is a dealer of MetaStock. And the reason we include this system with MetaStock is gosh, it was probably 8 years ago. He came into the office, and we asked him to show us what he was teaching people in India. And he said, okay, yeah, I'll show you one of my systems, and this is what I call my RMO system. And we just loved it. We basically bought the rights for it, and we've included it in every version of MetaStock since. So he's also a great dealer of ours. He's probably one of our most longest running dealers, and he's one of our most active. He's a great presence for us in India, which we really appreciate. So that's a little bit of background on it. I've been basically showing people how to use RMO ever since then, and it's just a system that works on so many different stocks and so many different instruments. It's designed to work on Indian stocks because that's where he's from. But man, as you'll see as we get into some examples today, it's really, really good. Okay. It is important to say that it is a trend-following system, and the trend's your friend, befriend the trend, rising tide lifts all boats, etc., etc., etc. So generally, the reason I like to show this is trend following is a great way to trade the market. That's what we're really going to be looking at. And he does a really good job of identifying trends and all that kind of good stuff. The reasons I like it, a lot of the classes that we've talked about, MetaStock's pretty easy to use, but RMO is really simple to use. It's also 100% objective. In other words, at no point are we going to be looking at like Fed's cutting interest rates or the quantitative easing number 4 or 5 to try and make decisions on what we're doing. It's entirely rule based. We look at what the trend's doing, following his rules, and when I do this in live audiences, when we kind of go through the rules, I say, does that make sense? Can everybody see? And everybody kind of understands it. If you use it the way that Rahul teaches, you're going to also have stop losses in place, so you're using stop money management, and it works on a lot of different instruments, and it's really, really a pretty simple process to go through. So let's get to the steps. The first thing I'd like to ask you guys is if you're interested in kind of seeing this and how it works on stocks you're interested in, just type in the symbols. We're going to be in MetaStock in just a second, and I'm going to be basically looking at either my symbols or symbols you provide. So if you have some things that you want to look at, go ahead and type them in, and we'll take a look at some examples. Since it's objective and since it's trend-based, the first thing that we want to do is identify what Rahul calls the prevailing trend. And basically that allows us to go in, and obviously we want to be able to, if we want to trade with the trend, we have to be able to detect it. It just makes sense. So the first thing that we're going to do as part of our step 1 is we're going to identify that primary trend. So going back over into MetaStock, I'll show you how to do it. Don says black diamond. Okay, we'll put that in there. Okay. And I was kind of looking at it on Apple because it looks really good on Apple. It works really well for a number of years on Apple. So let's go ahead and what I want to do is I want to take a step back and just show you how you can kind of get everything applied and installed and that kind of stuff. So a request to look at Apple actually. Okay, so let's look at bdi.to. Oh, bdi.to. Okay, and then actually. just type them in right here, bdi.to, Apple. Robinson, yes, we're recording the session in 2 different places. We've had some problems with our recordings lately, so it's a good thing we record them in a couple of different places because otherwise we wouldn't have any. HD, Home Depot, you got it. Okay. And now, okay. Here I'm just going to load the default records and display about a year of data. I am going to go to a daily increment with RMO. You can use whatever you want. I always get questions, will this work on hourly? And I always answer the same way. It will, but I would recommend that you kind of, with anything that you're adding to your trading, look at a lot of examples before you start. And then I like the concept of kind of taking in, and you can kind of scale in when you're using a new system. In other words, like you can kind of paper trade it for a while as you get to feel more comfortable with it. You can buy a little bit so you have some skin in the game. And it usually takes me several months to actually get full scale on something. So if you even like this, I would recommend you play with it. Most of you already have the MetaStock trial or already MetaStock customers. So here we go. We've got daily. RMO trade model, I've got 3 stocks, and the template you want to do, the one thing that's really kind of important is you want to apply a template, and the template you want to apply is RMO trade model. We'll go ahead and open that up. That's going to open up all 4 charts for us, and there we go. All of them have the different indicators we're going to cover, and we'll just start looking at this. All of these charts actually look pretty good, just eyeballing it. But let's go ahead and I guess we'll start with Home Depot to kind of go through the rules. I'm going to go ahead and minimize this a bit, kind of just, and now remember, we want to identify the primary trend. And when I say primary, it's kind of the same thing as saying the long-term trend. What's this stock been doing long term? Is it going up? Is it going down? And to do that, what we're going to use is the green indicator here. It's called the Rahul Mohindar oscillator. Okay, so I'm going to make this full screen. Okay, and what this is designed to do is it's designed to kind of measure that long-term trend and over time. Okay, and the way we read it is very, very simple. And this whole method is very simple, which is why I like to show it. Because if you're on a trial and you like this, it's something that you can easily implement into your trading, and it makes a lot of sense. So the way we read this indicator is very simple. Long-term trend, and it's either going to be above 0 or it's going to be below 0, and that's the way we read it. If it's above 0, like it was pretty much from August right here to just recently, if it's above 0, then long-term trend is going to be bullish. Okay, so anytime it's up here, it's going to be in the bullish territory. Okay, with it being long-term bullish, which it isn't right now, we'd actually be reversing these rules right now. But if it's long-term bullish, basically what that means is that we want to look to trade in conjunction with that trend. So very, very simply, we don't want to take short positions. We're only allowed to go long. Okay, so we won't be betting against that overall or that primary trend. We won't take short positions until it goes below 0. And you just reverse the rules if it's short, long-term bearish. If it's below 0, then you'll go short, but you won't go long. Okay, and it's only, notice I'm very careful when I word this. You're allowed to go long. It's not a trigger at this point. We'll be getting to what triggers into the trade. What we're looking at is we're looking at the weather forecast and saying, okay, well, right now it's the middle of summer, so maybe a tank top makes sense. But we're not really, we haven't looked at the weather forecast, we haven't looked at the actual short-term trend, so we want to kind of make sure everything lines up. So that's the way we read this. We've actually kind of done a few things on the MetaStock chart, and I believe Rahul did these. But you'll notice here we went long-term bullish. We stayed long-term bullish for a really long time. Okay, right here we finally went short long-term bearish. In other words, we dropped down below 0. And to make it even a little bit easier to read, whenever this indicator is in a bullish state, we're actually going to put a ribbon on the chart that says RMO bullish, RMO bearish, RMO bullish, RMO bearish. So it's always going to be green. Rahul's also really specific about this. He says, as traders, we tend to overcomplicate things, and I would definitely agree with that. Size of this doesn't matter. Shape doesn't matter. It's either above 0, in which case we can go long, or it's below 0, in which case we can go short. Okay? That's step number 1. Any questions? Okay. And again, if you have questions, again, I'll do my best to answer them and all that kind of stuff. So just to reiterate, if we're in a bullish zone, that means we're above 0, or we have a green ribbon on the chart, we're allowed to buy. You're not allowed to short, and it's not a trigger to enter the market. Okay? Again, we'll get to the triggers in a minute. Okay? So that's step number 1, and remember I said there's 3 parts to kind of getting into the trade. So the second thing we want to do is we want to identify the short-term trend. And we do that in a very similar way. Let's go back into MetaStock real quick here. Okay, and what I'm going to do is I'm actually going to, first we looked at this indicator here. I'm going to make the second indicator pane right here full screen. Okay. And I'm going to change it. My particular view that I like is I like to see this as a line, and I think it'll make sense as to why later on. But if you like to look at it as a line as well, just right-click on it, go to Properties, and change it to a line instead of a histogram. It's really easy to do. I prefer to look at it as a line, but that's not. This blue indicator is not the one we're going to talk about until step number 3. Okay, so don't get too confused yet. What we want to be looking at is we want to be looking at this pink indicator. It's called swing trade number 2. Okay, with swing trade number 2, you'll notice if we compare it directly to the RMO, generally it looks very similar, but it's a lot faster to go down below 0, and it's a lot faster to go up above 0. It's a lot more reactive to the market price. Right? And we read it in the same way. This is a measurement of our short-term trend. Okay? And the way we read it is the same way we read it, the long-term trend. In other words, if it's above 0, which it isn't right now, it's below 0, but if it's above 0, then our short-term trend is also bullish. Okay? If it's below 0, then our short-term trend is bearish, and that's the way we read it. Okay. Now the rules also kind of make sense along with it. Okay. So the rules to go with the short-term trend is, in order for us to trade, it must match the long-term trend. Okay. If it doesn't match, in other words, if we have long-term we're bullish and short-term we're bearish, we're going to wait for the market to kind of decide what it's doing. Okay, it has to match. If it doesn't match, well, you can run scans to find stocks that may match, or you can wait. But we don't want to trade unless we're putting those odds in our favor. So we want to wait until they match. So that's rule number 1. We want it to match the long-term trend. Okay, and if they're both bearish, they're both bullish, we are still allowed to buy. That's pretty much what it is. And we're still not allowed to short. That's really kind of what it boils down to. We're looking at the trends. Okay, so in this particular case, we had to trade on this right edge of the chart. It would be a little bit easier if we traded back here. But if we're looking at Home Depot today, well, long term we were bearish and short term we were bearish. So if we got a trigger to get into the market, we could go ahead and structure a trade. As long as we have that trigger, which we didn't get yet. Right now we're looking at the allowances. So that's step number 2. I don't see any questions, so hopefully that means it's very, very clear to you. If you do have questions, please feel free to ask. But again, that's step number 2. So if you come back into the PowerPoint here, if the primary trend is bullish, the long-term trend, and the short-term trend is bullish, we're still allowed to buy. We're not allowed to short, and it's not a trigger. Again, if it's bearish, you just reverse that. You're allowed to short, but you're not allowed to long, and again, it's not a trigger. What we're looking for with a trigger is what we're going to cover next. Cool. All right. If I added this a number of years ago, and I just love this bullet. If the primary trend and the short-term trend do not match, you're allowed to wait. You don't do anything. Again, if we're going into town, and we want to get to town, and we don't really care in an efficient manner, well, we want to go and try and time ourselves so that we hit all the lights. And it's not any different here. When we want to kind of follow the tide with these things. We want to make sure that when we're buying and we're following the trend, that the trends match up. It's about maximizing the chances of having a good trade. Okay, so step number 3. Now we're going to talk about how we kind of get into the trades. This is where the conversation gets a little bit longer because we start to talk about money management and how that all kind of keys into everything. But what we want to do now is identify a trigger to enter. Okay, let's go ahead and get back into MetaStock, and we'll talk a little bit about this. And let's just to recap real quick, we talked about this line here. We talked about the pink line. One thing that I didn't point out, but I wanted to, is the color coding of the charts. So if we kind of come back here, right here, we drop down below 0 on our short-term trend. What the blue line, or a blue chart, means that short-term we're bullish, and a red means short-term we're bearish. So if we look at where these the chart starts painting red, that's where short-term we drop into a bearish zone. Okay, does it make sense? So again, we can either look at the indicator itself, the swing trade number 2, this pink indicator, to determine that short-term trend, or you can look at the color of the bar. It will always match this program to. That's the way the highlights work in RMO. Okay, let's talk about triggers now. Okay, and I'm sure you're seeing a lot of buy and sell signals on the chart. So those are painted by what we call our triggers, and let's talk about how those happen. We talked about the long-term trend. That was the green line. The pink line is the short-term trend. And now I want to talk about the blue line, which is our medium-term trend. And not to confuse you, the blue line, we don't care if it's above 0 or not. We're not using that in our measurement. It is measuring the medium-term trend. But what it's looking at, and what we look at with RMO, is we look at that as a we look at that against the short-term trend. Okay. And now the way that we look at it is we look for it to cross under like you would a moving average cross. So for example, right here, if we kind of backed up and we looked at the chart here, what we're having from here to here is probably a pullback in price. In fact, I can almost guarantee we're having a pullback in price. And when that pullback in price happens and it's severe enough, it's going to make the short-term trend cross down under the medium-term trend. And Rahu calls this a change of momentum or a change of force. In other words, we were bullish, which drove the trend up. Now it's starting to turn around. And that's actually what, if we kind of go in and look at this right here, if I look at exactly when this cross occurs, which is between this day and this day, that's where you're going to see the sell signal come in on your chart. In other words, what it's saying to you is the momentum appears to be shifting from the bulls to the bears, and that could be a good entry signal. Now, in this particular example, we're not going to go ahead and take a short position because at that particular point in time, we're bullish long-term and we're bullish short-term, so it would violate our second set of rules. But if we're looking right here in this last signal that just happened a couple of days ago, and I'll remind you that this isn't a recommendation to buy or sell, but if we look at this example of a couple of days ago on Home Depot, I'm just going to kind of move that horizontal. I'm going to try and get control of my mouse here. But if we were looking at this example here, and we were evaluating a short position here on the 5th, at this particular point, we would go ahead and structure a short trade following some very simple rules that I'm about to talk about. Why? Because we get that change of momentum. In other words, the price appears to like it's starting to go down, which it did, and we're in a bearish trend long-term and we're in a bearish trend short-term. If we get a buy signal, and well, in that case it was a bad example because we were long-term bullish and short-term bullish as well. But if we're back here at this particular part of the chart, I'm just going to push it right here, we get a buy signal and we're in a bearish trend, and long-term, we're going to ignore it. We're only going to pay attention to the signals that are in our direction or in our favor, or in the direction of the overall trend. And hopefully they'll end up in our favor. Let me go ahead and delete this, okay? And let's go through some examples, because what I want to do is I want to go back a little bit in time in this chart and walk you through some trade examples of how you would manage the trade. So up until this point, do you guys have any questions? And please feel free to ask. Is there any, Charles asks, is there any consideration for divergence between short-term trend and prices in HD in March? Not according to the way, that's a good question, and according to the way Rahul teaches it, and remember he likes to keep things very, very straightforward, but he doesn't overcomplicate it. He basically says size and shapes of these indicators don't match. Either the indicators work in your favor, or either they're bullish or bearish. Okay. Now, we do have a lot of people that'll just look at RMO and they'll use it with their other system to kind of confirm that they're in the right long-term trend. But the way Rahul teaches it is very, very specific. Keep it simple. Philip asks a question: is swing to trade 2 medium trend and swing trade 3 shorter trend? Actually, the pink indicator is swing trade 2, and it's the short-term trend. Okay, and then swing trade number 3 would be your medium-term trend. Thanks for the question, Philip. Cool. Okay, so we're going to kind of go back in the way back machine here. Okay, and again, I'm going to walk you through how this would work on a trade. So I'm just going to pretend we're looking at the chart right here, and we basically get a signal on the chart. Let's say we ran a scan. Home Depot came up in a list for us, and we were looking at this to kind of evaluate whether or not it was a proper trade or not. Okay. So we come in here, we see the signal to go long. The first thing we want to do is identify that it's in conjunction with the bullish trend or the long-term trend, and it does. Okay, we can see that because it's bullish. Of our bullish ribbon right here. We can see that because it's above 0 here on the chart. So, okay, so it's past step number 1. So at step number 2, we look at the swing trade number 2, this pink line here, the pink purplish line. I'm sure there's a proper color name for that. I'm going to call it pink purple for today. But we're going to look at that, and it's also above 0. We could also look at the bar, and it's blue, so that's telling us that short term. And it's bullish. So short term it's bullish, long term it's bullish. Now we can do a trade around this. Okay? There's one other thing that we're going to do. We wouldn't necessarily buy right here. We're going to put in a limit order. What Rahul teaches to do is to let it confirm. So usually the way we do that is we'll look at the high for the day we're buying, and we'll look at the high of the day before we're buying, and we'll say, okay, this is the higher high of the last 2 days, right here, okay? And I'm just going to move my, and I'm going to put a entry point. This will be basically my entry point for just a couple pennies above. That's it, okay? So I'm saying now is if this doesn't go above its high for the last 2 days, I'm going to go ahead and buy. Or if this goes ahead and goes above its high for the last 2 days, I'm going to buy. Okay. Now you can do the same thing. What we want to do is we want to be able to establish a stop loss here. And I go back and forth. There's 2 ways that Rahul says to play with these in terms of a stop. He'll either say look at the low for the day and the day before and put a stop right below the value, or he'll teach to look at the latest pullback in price, which I would say right about there, and put a stop there. And for a long time, I actually gave it the tighter stop. I've actually kind of migrated to using a little bit of a looser stop. I find that was working better right now. I'd recommend you play with it and pick one of those 2 methods. So if we were going with a little bit of a looser stop, we would go right here. So our entry price, what we're going to say here is we're going to get in if the stock goes above 81.28. Okay. If we get into the trade, so if we get into the trade, we're going to put a stop loss at, I'm just going to highlight over this, 79.21. Okay? And you notice what I love about this thing? I've made the decision now. I know if I get into this trade, I'm going to get in at 81.28. I know if I get in at 81.28, I'm going to get out at 79.21. What does that give me a pretty good idea of? Our maximum loss, our risk. Yeah. So, I mean, and you have to be careful when you use terms like maximum loss because, let's face it, Home Depot could gap to 40 tomorrow. I mean, it's probably not going to happen, but it could gap below your stop, and then you get out at the closest price you can towards where it basically opened. But in most cases, it's not going to gap really, really far, and you never have 100% idea of what your risk is. Unless you're buying the option, and then you're not going to lose more than your premium you paid to get into that position. But in this particular case, we have a really good idea of what our risk is. Our risk is about $3 a share. So the difference between 79.21 and 81.28, 79.80, 81, only $2 a share, approximately. And so we have a good idea of what this is. And we also have those in place. So if we buy this, we can buy it on a limit order if we want to. But if we buy this, we can then put in a stop. That's at 79.21, and we're not trying to make decisions as we go, which I find is never helpful for me while I trade. Cool. Okay, so let's go ahead and follow along with this example. And yes, Don, we are going to cover how to move your stops and how to do the money, well, how to kind of put in the trades and stuff like that. I don't really have a lot to talk about, particularly how many shares you should buy, how much risk you should take on, and that kind of stuff. But definitely, a big part of money management is understanding your risk and having a good game plan for it before you get in. So, and I'll talk exactly about how Rahul specifically teaches it and how I like to use it. Okay. So the next day comes, we're right here now. It opens above, so we get in at this open price. We get in at 81.54, which is just a little bit above our ideal price. Ideally, we'd get in at 81.29. But the trend confirms by going above its high, and so we go ahead and buy in at the open, and we sit there and we put in our stop loss, and then we'll just kind of play with how it goes. Okay, and it does go up just a little bit. It starts to pull back. It doesn't look like it's hit our stop loss yet, but this is right here is a really good example of what we're going to talk about now. Okay, and that's, we come in here, we're in a trade, and all of a sudden price starts to pull against us. It almost hits our stop, which is an automatic out. Okay, but we do get a signal that momentum seems to be shifting from the bulls to the bears, or from the, yeah, I said it right the first time, from the bulls to the bears. And this is really, when we're in a long trade, this is going to be our first warning sign. In other words, if we're in a long trade and we get a red arrow on our chart, we're going to start to pay attention to the trend. Okay, this could be a normal pullback, and it could establish a support level here. But if it, ooh, that scared me. I just had my phone rang right in my ears. If it doesn't establish that support zone, or if it continues to go down, we're going to stop out. And certainly if we get a sell signal and then the trend goes bearish for short term, which it did the next day, you'll notice we have this red line, which means short term we're bearish. If we get long term bearish, we're reversing. In that case, you'd do a stop and reverse on this particular system. Most of the time, though, I'll tell you based on experience, you're going to get out on a stop loss. And in this particular case, what happens is we flatten out. It establishes a new kind of support pattern, and it resumes its primary long-term bullish trend. Okay, so let's keep driving it. Okay. So we have a new test of a new support resistant area. It comes back, and then it kind of continues on its upward journey, which is great because we're long at this point. And what happens is when that pullback happens, you're going to get a new buy signal on the chart because as the trend starts to resume, just naturally it's going to have a change of momentum again, which is going to give you another buy signal, which is what happens right here. Okay. Now, what do you think what happens when we get a new buy signal and we're already in a long trade? I am waiting for an answer. I'm gonna see if somebody sends it in. I'm also having a little sip of water. Dennis says you could add on, and you could, depending on how you wanted to do it. But actually, Rahul in his classes says buy as much as you want on your first trade. He's not a big fan of position sizing, and he doesn't want us to do nothing. He wants us to do something that's actually really important, and that is to move up our stop. And that makes a lot of sense to me because we've had a pullback. We've established a new support zone. Let's call it right here. We think it's going to go up, and it makes sense to kind of put up a stop loss and kind of either lock in some profits, which we're not profitable yet. Well, we're barely profitable now on this day, right? But it makes sense for us to, now that we've established a new zone of support, to move up a stop, which is exactly what we do. And using Rahul's rules, what we're going to do is we're going to put it right below the low of the recent pullback, okay, which I put right here. So now instead of that initial loss, we've only moved up a little bit, but now I'm going to kind of just tighten up that stop. And again, the reason I like this is a lot of people go in and they'll set stops based on what they can afford to lose. And I don't think that's great. I don't think that the market pays attention to how much you can afford to lose. But the market does pay attention to support and resistance. And if we put it right down below the support level, that makes a lot of sense. It gives us enough room to fish. But if it violates that support, we're going to be out like that. And again, the other thing that I like about this is it's very clear in terms of why we're moving it. We're not moving it up because we feel like it or because we want to kind of, we're moving it up because we're starting a new upward trend cycle and we have a new support area and we're going to put it right below that support area. Very simple stuff. And that's why I like it so much. People can understand it. Let's kind of move on a little bit, because that's really the system in a nutshell. Most of the time, here we go, we do have a really nice move up in Home Depot. Same thing happens. As is natural, you have an upward trend. You have a pullback. That gives us a change of momentum or a change of force. We set a new resistance level. We get a new long signal. We move up our stop. It's just rinse and repeat at this point. So here we move up our stop down to beneath this support area. And we just keep following it along. That wasn't such a good uptrend. And this is kind of like what I like about it too. You'll notice that we're starting to lose momentum maybe on this trade. We have a little bit of an upswing, comes down a little bit, and what are we going to do again? Here we get our buy signal, we put in our stop. Okay. So as this trend starts to move momentum and maybe shift to a more bearish mode, we're tightening up that stop and just giving it enough room to move. Okay. Here we move our stop. In this particular case, we have a sell signal. We might move our stop at this point. On this sell signal, I'd probably put it right below those lows, and we get out of that particular trade here. So in this particular example with Home Depot, nice move up. We didn't get in at the very bottom. You're trend trading here. You didn't get in at the very bottom. You didn't get out at the very top. But we were able to take from this part of the trade here to about this part of the trade. That's a good 80%, I would say, just rough guessing it. Here's where we got in. Here's where we got out. We took a good 80% of that movement. And that whole time we had a process in place where that trade started to go against us, we knew where we were going to get out. Charles says, do you measure potential gain or target price by amount of previous leg up? Not the way that Rahul teaches it. There's a few things. I like to look at fib projections and things like that. But I like to, when I do these particular classes, stay very much in line with the way that Rahul teaches to use this. You certainly can, and as you get better, it's one of the nice things about it. You can kind of go in and kind of look at potential moves and stuff like that. On a stock like Home Depot, I don't know if my fib ways would work. I always use kind of fib projections to kind of set targets on Dow when I'm in positions on it. Okay, cool. in this particular case, we did have a pretty serious pullback that pushed us out of the trend. Okay, if that upward trend resumes, we're going to go ahead and get back long. We would have never went short during this period. And that's the other thing that I like here too. If we look at kind of the price activity here with Home Depot, and I don't think we'll go trade by trade through it anymore, but let's just look at where it goes bullish to bearish. Okay, if we just look at this as an example, yes, I'm going to delete this. I'm going to actually, here's a little trick for MetaStock for you. If you want to get rid of all of your lines, go to Edit, Delete All. I'm just going to take all the line studies off, click OK. Yes, and they're gone. Okay. If we just look at this though from that movement up where we were only taking long positions, forget about the individual trades. If we were started only looking at long positions on July 22nd, and we stopped taking long positions here in April, the price of the Home Depot went from 80 bucks to over 100. And I would say by only going long during that uptrend, you're going to be doing a really good job of kind of putting the odds in your favor. And the rules are just kind of a bonus to kind of allow you to stay disciplined about it. Okay. Let's look at a couple, we'll eyeball a couple of other examples. Let's go ahead and click into a center view here. Black Diamond. Okay. Black Diamond right now, we'd be bullish and in a long trade. Again, where RMO is going to really pay dividends is these very long established trends. And it looks like from July, from right here to about right here, and again, I love Robert Deal saying, if you've heard Robert Deal speak, he doesn't do a lot of talking anymore because he's retired, but he used to always say, bulls make money, bears make money, pigs get slaughtered. I think that's true. You're never going to find a system that's going to get the exact top, but if we were looking to go short and we started to take short positions here and stopped here, I think that's going to be something that's going to be beneficial for you. In other words, I think your potential trade opportunity, and if we went trade by trade through this, we'd move our stop here, we'd move our stop here, we'd move our stop here, we would have taken most of this move. But by identifying and trading in relationship to that primary or that prevailing trend, it's going to be hugely beneficial for you. Okay. Dennis asked a question that's probably, I'm going to give you an answer you don't like, Dennis. When you're evaluating a stock, do you look at the trend of the indexes, i.e. the Dow and the S&P? Dennis, I only trade the index. Like this morning I bought options of Dow. I'm pretty happy about that because we've been so sideways on the Dow. But I only buy options on Dow. So personally, I don't trade a lot of stocks. Most of our customers do. The reason I like Dow particularly is I'm busy. I don't have, I work 60, 70 hours a week, and trading's a lot of fun for me, but I try and keep something that's a little bit more broader market and broader base. So I look at Dow indexes. You can. There's certainly a lot of tools that are available, EchoStat and SectorStat to name a few, in MetaStock that do a really good job of looking at the indexes like the Dow and the S&P 500. Don says, will you cover the exit swing signal? I don't understand that. Yes, I will. Keep in mind, I don't use it because I don't trade this real time, but the way Rahul teaches that you use it is if you're trading RMO intraday, like hourly, 30-minute, 10-minute, it's an additional exit signal. Let's go to a 30-minute chart, and I'll show you how they work, Don. And it's really for people that are trading like hourly, so 30 minutes or on an intraday basis. Okay, and what you're looking at, and the way he teaches to use it, and I can send you his training video. He goes into a lot more detail. He obviously has a lot more expertise on it than I do because I don't even use it. But what he says is if you're in a long position and it comes down below the blue line and then pops up above it, so right here, at this particular point you can start to trail a stop loss. So that's the way that works. If you're in a short position and it goes up above the red line, and down below it. So like right here, at that particular point, you could start to trail a stop loss. Sure, Dennis, drop me a message, and if you guys want to see that video, he does a really good job. I just love how thorough he is with things. But here's my email address, Dennis. Drop me a message. I'll send you that training video. He goes through a really good job of actually displaying that. So I think that I sent that to everybody. Anyway, okay. Any other questions on RMO? Charles says, is there any way that from the right edge of the chart that you could predict the strength of a new uptrend or downtrend? Not really. You're going to go through periods of consolidation where you lose money, and that's that's when you're going to lose money with RMO, because it is a trend-following system. There's different indicators that you could look at to kind of do that. But not part of the RMO. Generally speaking, obviously RMO works really well with stocks like Apple and those things that generally tend to get in a good trend and stay in them for a long time. But it's not part of the system. Robinson says, can I combine RMO? Actually, he asked, do you combine RMO with candlesticks? I don't. I traditionally use the symbols, but you certainly could. And if you wanted to change this, it's obviously not a candlestick chart. If you wanted to change it to candlestick, all you had to do is just double click on it, go to candlesticks and hit apply, and you'd be looking at candlestick charts. Okay. All right. Now I promised to answer a question. I think it was Don, but it might have been Dennis. One of you. It was Dennis. Okay. I went up to look. Asked how to use the CPS pre-filter scans. Let me show you that real quick. Anyway. To sum up, RMO, great trading system. Play with it. I think you'll like it. I've used it for years. I've shown it for years. Very good if you're looking for a methodology that's a good trend following methodology. Take a look at it. I love it because it's simple. I love it because I can go show it to people that are brand new to MetaStock, and we get a lot of really good feedback on RMO. So then that's really the whole point. Let's talk about how to use the Bigelow pre-filter scans. So, real quick, and then we'll just kind of wrap up unless we have some questions. Robin says, can I use CPS with RMO? Sure, absolutely. The way that people combine RMO, like a lot of people like the trend identification, and so if they wanted to use something like Bigelow in his package, what they usually do is they use the main RMO indicator, the primary term trend, to confirm. So in other words, they wait for Steve to give a pattern that might be like a J hook or something, and as long as the prevailing or primary trend matches up, that's the way a lot of people combine it. You can do whatever you want, and what my recommendation would be for you is decide what you want to do first. Second, test it and make sure that it makes sense and that it works over time. 3, skin in the game. A little bit of skin, a little bit more skin, a little bit more skin as you're comfortable. And as long as you kind of keep making more money, you can kind of go in to a point. But that's the thing I love about particularly trading and options trading. If you want to do options trading with RMO, you don't necessarily have to go buy 10 contracts out the gate. You can buy 1. And that way you have a little bit of interest in kind of watching it, but you're not kind of putting the boat on it. You know, you can scale in. And regardless of what you decide to do or which systems you decide to like, we've talked a lot over the last 5-6 weeks about how to look at systems, how to evaluate them, how to test them, how to forecast them, and things like that. And I lost my train of thought. But just use discipline and use something that works well for you. And that's really what it comes down to. Bonus scans for CPS. Okay, going to come down here. So when you install the bonus universe and the bonus universe oversold, I'll tell you how we decided to come up with these. We obviously built all of the 26 different patterns with Bigelow, and I love Steve. He's one of my favorites. So he's such a cool guy. But we were kind of doing some talking about MetaStock, and he's like, I really, you did a great job with all of these patterns, but I don't really want to scan. I keep running these scans against the optionable universe, and I get stocks that I don't want. And so we defined what he wanted. In this particular case, and if I hover over it, we are looking to build a universe of stocks that have an average volume of $200,000 and a close above $5. So that's kind of what he wanted. Okay, and then there's this universe oversold, and the difference between that one is it looks for $5 and $200,000, and the stochastics to be above 20. So the idea for this is a scan you can run one time, and we'll weed out anything that doesn't fit those basic criteria. Okay, so for example, I'm not going to run it now because I have a report. I can just show you how to save the list. But if I went in here and said, okay, well, I want to do a universe scan, okay, and then let's go ahead and go through all of these optionable stocks, and what we're going to do is just weed out all the ones that are under $5 and don't have a minimum volume requirement. Okay, so we'd run this once. What we're going to get back, and to do that, you just go ahead and say, okay, this one against this list on a daily time frame. Start scan. That's really it. That's all you have to do. Okay. When it's done, what you're going to get is a report that looks something like this. Okay. So this is all the stocks that were above $5 and had 200,000 in volume when I scanned it back in March 26 of 2015. Okay. Now, you're really not going to go look at these charts because this is just your pre-filter. What you're going to do is you're going to click on Save List right here. You're going to go ahead and say, okay, this is my universe list. Okay, I'll go ahead and create that. I'll click on OK. I'll click on Close. And now if I come back and I want to run the J-hook pattern scan, instead of scanning all 4,300 optionable stocks, what I can do is I'll come to my custom list, and what did I just call it just 10 seconds ago? Here's my CPS, and instead of scanning all 4,300, about 2,700 met that criteria. Those are the ones I'm going to scan every day. And because I have just that on a list, it's going to cut my scan time in half because I'm not pulling 4,300, I'm pulling 2,600. So that's the idea. You use that as a pre-filter scan. You can run it every 6 months or so. Make a list that you want, and then just run your scans against that on a day basis. Okay. Dennis, was that what you were looking for? Cool. How do you remove XVZ from any stock list? Oh, that's an interesting question. I've never had that particular request here. Let's see. I think if you wanted to adjust a list, I wasn't totally prepared for that one. If you right-click on the list you want to change and go to Manage Custom List right here, it'll give you the list that you want. So let's say we wanted to remove a specific symbol from that. We'll just go to EPS. You click on Pre-Filter, and what I would do is find XVZ and just click on Remove Instrument, and that'll take it off the list. Okay. You made me think for a second there. Baron says, I'd like to get a copy of his training video. Okay, drop me an email. Otherwise, I'll send it to you, the RMO video. And I would recommend, if you want to look at RMO, he's a far better teacher than I am about it. And he's been teaching it for 100 years. I've only been teaching it for like 7. So I would definitely recommend you get it from him. And just drop me a message, and I'll make sure to send it out to you. Okay, jeffrey@metastock.com. Okay, cool. And it's a really cool system. I think you'll really enjoy it. I do. That was what I wanted to show you today. And it looks like we're running out of questions. Again, I want to thank all of you that have been here. Been to like 5 videos in the last 2 weeks. Came and saw them. Hopefully my big goal was it was beneficial for you to get stuff out of your training. Another thanks for all of you that kind of come to the summit. That summit is just amazing event. I'm so proud of it, and it's so successful because we get so many people there, and we can really attract some really, really good presenters. And thanks for coming. Thanks for making it a success. It's really, really cool. If again, Friday is the deadline for the bonus. If you haven't signed up for your MetaStock, go ahead. What's stopping you? Again, it's $358. That includes 3 months of MetaStock, 3 months of data link. You own Candle Profit Systems after that. You own his pre-filter scans, and you get 2 years of stocks and commodities. So it's a great value. Real time, the pricing is $549. If you haven't signed up yet, you've got till Friday, and then that 2 years of stocks and commodities is going to go away. The phone number to call is 1-800-882-3040. And if you need anything from me, this wraps up our boot camp. So for this session, if you need anything from me, though, please feel free to reach out to me. I'm more than happy to help in any way I can, even if that's just redirecting you to like our support team to have him help you answer a question or that I can't answer, or getting you to the right person. Thanks, guys, and we'll see you at the next Online Trader Summit. Appreciate your time.